Good morning, good afternoon, good evening, no matter where you are in the world. This is Howie, and I'm here to help you win with money. Today is Sunday, August 8th, 2021. I'm doing a video to talk about last week, week number 31, all the option trades and dividends from last week, 31. Before I go on with today's episode, I want to remind you, if you're on Facebook, please join Investing 102, where we can level up your investment thinking. So last week, the market ended up at new all-time highs for both the Dow and the S&P. What that means is everybody's account should be at all-time highs, like in your 401k plan or your brokerage account. So let's go straight into ETrade and get all the transactions. Okay, I'm going to copy these and then paste it into here. And now I'm going to fix it all up. So this is what it looks like after I fix all the rows. I added my notes, added the trade numbers, added some date math so I can see how many days to expiration. So I want to save this. Go up here. We'll slide on over. We're going to go to the pivot table. We'll hit refresh. And the new data is coming in. Let's just double check that. I fixed one minor error with the pivot. The dates it needs to be in the next month. So let's go into the next one here. Let's hit refresh. And now the new data for August is going to flow in now. So you can see that this is the new data for August. So let's look at the numbers for August. Basically, it's showing me that I'm losing money so far in the first week, which means we're off to a bad start again. Cover calls are fine, made some money there, made some money on dividends, lost money on iron condors, made some money on cash secured puts. And when you go back to this tab here, I fixed it here. You see I actually did do some trades, but most of the trades are still losing money, and most of it is just still fixing the S&P. I took a bad bet on Paycom. I lost money on Visa. Lost money on not MasterCard. I lost money on Microsoft. So a lot of these stocks, I had iron condors on Visa, MasterCard, and Paycom, and all three of those moved past my short call, and it forced me to close it. And a lot of those I lost anywhere from 4x or even 4x or between 4x and 6x of my original premium. So if I collected if I collected a few $100, I actually took a bigger loss. So a lot of these, if I collected $500, I took $1,000 or $2,000 loss. So you can multiply that by 4x, right? If you collect a $500 premium and then you lose $2,000, you're losing a lot more money than you collected. So that's what happened there. So I'm off to a bad week. You can see the trend. The good thing about looking at this is if you just look at the last 1, 2, 3, 4, 5, 6, 7 weeks for me, most of them have been losing. So let's talk through some of the trades. So here's the data for Paycom. I just show you that I closed Paycom for a loss. If you do this, you'll see it. I lost $1,229, and I didn't collect that much premium when I open it up. And you'll see that over here. I only collected $200. So that's a horrible one. You do the math, that's 6x. Here's the Microsoft Iron Condor. Again, it went past what I wanted. So here you see it. I lost $1,400 closing this one. I did collect some premiums the previous week. You see that here, $61. I collected some premium here, another $100, and then just do it. But it wasn't enough to make this a positive trade. So I collected $180, but if you look at the total loss, it still made no sense. So all that premium, while it reduces some pain, the Microsoft just moved way past what I expected and way faster. And I still had 15 days left on this. Obviously, I didn't manage it really well. I was hoping for a market turnaround, and it didn't. So I lost money on that trade. Let's see what the next one is. The next one is Fastly. Let's talk about what worked. So there's a couple of trades that happened with Fastly. and it starts over here. I was already rolling down and out. And if you see, I collected premium over here, and they're small premiums. And you see that over here. And then on this day, this is a Thursday, I created a new tax secure put, and you see I collected $62. Well, this trade then basically expires worthless, which is this one here. So that's $62, cost me $3 to close. So I made $59 on that. And then I collected, and I'm rolling it down and I'm playing it again. So I'm doing another cash secure put over here on Fastly. And then I had other positions on Fastly. So if you look at how much I made this week on Fastly, this is $276. And I think if you do the math, I have 200 shares plus one cash secure put, 12,000 plus another 4,000. So that's $18,000 is what I'm risking. And you see, if you were making 200 something dollars, you can determine what your profit is. 276, roughly $18,000 in capital. So that's sort of the premium that I collected. Let's look on the next trade. Here is Editas. So what happened with Editas is I think earnings were better than expected. I still collected a small premium, but if you look here, I collect a premium literally every week, and you can sort of scroll back and see the trend. I always roll up and out with this one. And you see I was rolling it up from 37.50, 39.40, and then this week I had to move it from a 44 to a 50, and because I had to do a big jump in the strike price, I have to move the contract further out. But I still collected a premium, and this option now is already in the money. I think Editas was trading at $54. So these are challenging. So I'm still collecting premium, and sometimes you have to be okay with whatever you're collecting. If it's a small premium, you collect it, just as long as you understand the math and is it worth it. So you may not earn 1 or 2% a week, but if you can earn, let's say, 0.5% or 0.3 or 0.2% a week, it's still better than the bank. It's still better than earning 1 or 2% a year. You'll still make more. So these are the things that you have to think about as a trader. The next one is carparts.com. I'll show you what I did recently. So this week I just did a rolling out. I kept the same put. This is a cash secure put. This is wrong. This is a cash secure put. Okay. So if you look at the premium, I only collected $32. And what happened was it was at $16, and then it just moved in the last 2 days. It's now over $18 or $19. But you can see how I was playing it. Last month, I did the same thing. I collected another $30 for rolling out in time. And then the same thing in the month before. You can tell by the colors. Each color is a different week. So that week number 26, I did the same thing. Collected 87. And here was a weird one. I had a cash secure put that was really losing value because it was at $12.50. And what I did was I shortened up the contract by rolling it up. Remember, these are cash secure put. So I'm shortening it up by rolling it in, and I'm rolling it up towards the market price. And I collected a premium of $24 to do it. So in the last 6 weeks, I collected $175 without ever owning this share. This share is now about $17, $18. You can see that's 10% return on capital in the 6 weeks, even though I don't really own the shares. They're just holding my cash. So these are good ways to play companies without ever owning the stock. You're just basically rolling up or down with your options and trying to collect the premium. And at the end of the year, we'll see how much money we make. You know, you should be able to make 4 or 5% return pretty easily. Sometimes you can make 10, 15, or 20. So I'm going to show you that data at the end of the year. Okay, that brings this video to an end. With that being said, don't forget to give me a thumbs up, like, comment below. Also, watch my playlist. Go to my playlist. There's different videos that I make, and you can see that I have exposed by math. I have some simple save money tips. I have different type of videos. If you're interested, go to the playlist. Okay, thanks again, man, and don't forget, let's do this together. Let's do this $1 at a time. As always, have a profitable day. Bye-bye.